Buuza Kamisona.
We welcome you again to this program of Buuza Kamisona. This week, as I promised you the last time, we are going to continue with the second part of the question of our brother, Mr. Joseph Wasoma from Chileka, who asked the question, what's behind different taxes on one business and how are these taxes calculated? So our focus today is on indirect taxes because last week we dealt with the issue of direct taxes. So quickly, let me show what other taxes apply to imports. So we have import duty, which I've just explained. It can vary from 0 to 35. We have excise duty. We have VAT. We have withholding tax, which is income tax paid in advance, and we have infrastructure levy at different rates. So as we look at this example, I will go through the rates. Now, supposing you are dealing in cosmetics. Cosmetics are those that have the highest tax at import duty. Cosmetics fall under the category of finished products that can be manufactured locally. And therefore, the applicable import duty is 35%. Cosmetics, import duty here, import duty would be at 35%. Supposing we are bringing in stock of cosmetics worth 10 million shillings. This is the cost price. Wherever you're buying these perfumes, lotions, and all sorts of cosmetics. If you're buying it at 10 million, the import duty will be 35%, which will be 3.5 million. Okay? The next will be value added, no, excise duty first. Excise duty first. And excise duty will be the 10 million plus the 3.5 import duty and 10% of that. So excise duty, excise duty will be 10%, but 10% of what? 10% of 10 million. This 10 million is normally referred to as the cost of cost, insurance, and freight, CIF, meaning the cost of goods plus the cost of shipment up to here. So the CIF. So CIF plus 3.5, which we've just added on as import duty. Therefore, 10% of these two will be this, and this is 13.5, 10% of that will be 1.35. Okay? Then the next tax to consider here will be VAT. VAT is value added tax. Remember, for someone who is buying these cosmetics for sale, this will be their VAT input. It is input. Meaning they will pay it here at importation and then they will recover it when they are selling. This will be your VAT input if you are bringing these cosmetics to sell, if you are not the final consumer. And VAT is 18%. 18% of what? Of 13, our base here, plus that now. 13.5, which is this plus this, plus 135. Okay? So 18% of all that together. In the interest of time, I'll just put it there. It is 2.6 2.673. I'm jumping some steps here to save our time on air. So that becomes the VAT applicable on this consignment. Then finally, there is withholding tax. We talked about withholding tax. We said it is advance income tax. Advance income tax, because when you're making your final income tax return, you'll take credit of this. And what is this? It's normally 6%, of which base we are using the CIF now. We are not going to add this. For this one, it is 10% of the 10 million, the CIF. Cost, insurance, and flight. So this one would be 600,000. Okay? Then finally, infrastructure levy, which is 1.5%. Infrastructure levy, 1.5% of the CIF again. So this would be 150,000. So all these taxes payable on an import like cosmetic, which pays the highest. When an importer is bringing these products in, they will compute all these taxes and pay them to URA. And they will get the total taxes here paid. This comes to about 8.273. The total of all this is 8.273. Okay? So these are all taxes paid on this item of cosmetics. They will get this, add it on to the CIF, which was 10 million, the cost, the insurance, and flight. So up to that point, these items have cost them 18 million. 18,273,000. Now, they also have additional costs of running the shop, paying the workers, paying the bills, and so on. They add all that together, so that what they come up with now helps them establish the cost per product. That is why if you go to China to buy this shirt yourself, you may buy it at less than $2 or maybe $3 or $4 for argument's sake. But if you're going to buy it here in Kampala, you'll most likely buy it 3-4 times what you would have bought it in China. So why? There is the CIF, there are the taxes which I've just explained, and there are the costs of the business, selling that shop, paying for rent where they're going to display it for you to find it. And therefore, if you find this shirt in Kampala, you will not pay the $5 you'd have paid in China. You'll most likely pay $20 for the shirt, or even $50 for the shirt.
Buuza Kamisona.